In this video, we're going to discuss how to create a pivot clock. And a pivot clock can be very helpful because pivots occur at various times through the day. But when you collect the data over a course of many years, you find out that there is a frequency that certain times indicate greater probability of a pivot. We'll prove that in just a moment. I'm using QuatraPro. There are many other spreadsheets out there, and the formula for creating this pivot clock may vary from one spreadsheet to another, but I'm going to show you how we do it with QuatraPro. The process is nearly the same with any other spreadsheet. The only difference is the exact formula that is used. But the one thing you need to know about time on a spreadsheet, when you put in a value such as 7:31 a.m., that number is really represented by a decimal. This number is represented by a decimal. This decimal represents a time. So if I go into my properties and I change this decimal to a time, that's what it shows up as. So depending on how you've got your spreadsheet set up, it's important to know that a time is actually a decimal. So the difference between 732 and 731 is that number. And that's important to know when you're setting up the spreadsheet. If I want to have every 1 minute increment through the course of the trading day highlighted, rather than put in each number, I can just put in 731, and add that number to it, and I get this. Then I get this. So if you want to quickly create it, you don't have to put in every single number. Just add the increment. So this is column D, cell 3 is added to this decimal, and it comes up with cell 4, cell 5, and cell 6, and so on down the line. So that's how you create your numbers. I'm using, of course, Mountain Standard Time. Now I'm going to ultimately harvest a considerable amount of data. And what I want to find out is how many pivots occur at each minute during or across the period of time that I've collected the data. How many pivots occurred at 7:45 or at 7:58, 8:08, whatever the case. And the way I do that very easily is by using a formula. Now in this spreadsheet, that formula uses @COUNTIF. I start off with the cell that I'm using, in this case column A, starting with cell 3, and I'm going to run that through how many rows of data I have, and I'm going to compare that. I'm going to collect it for each cell in column D. So in this case, it's cell D3, then let's make that easier to see. Then it's D5, D6, D7, and so on. So I just use this formula for collecting the data, and I'll get my distribution very easily without having to literally count how many instances at every single minute. You'll go nuts doing that, and you don't need to. So let's now go ahead and get the data. So we go over here to a chart, and I'm going to use a 1-minute chart on the ES.D contract, and I'm going to select the amount of data, however much I want, to create this clock. Now in my case, I'm going to collect 5 years worth of data. That's a lot. And in some cases, your computer may have a hard time handling that much data. But that's what I'm going to do. Now, what I want to do is I want to create pivots. So you can go into the studies, add studies, go over here to your show me studies, and add your pivot high and your pivot low. When you do that, you then need to identify the left and right strength. And in this case, I've used 10 for both. Left and right strength on both the high and the low pivots. Turn that on, and within seconds, I've got all of my pivots. Now I need to just save the data. So I go over here to Data Window, up to the left, save it, and then I'm going to name it. In this case, 5 years of pivot data in a text file. Now the process of collecting the data is done. Very quickly, you can collect that data, but now you've got to sort it out. So we'll go back to our spreadsheet, and I'm going to go now to collecting the data, and I've already done that. So I'm just going to pull it up. So when I initially collect it, you're going to have more data than you need. You've got both date time, open, high, low, close, up and down, and then your pivots. You don't need all that data. What you need is your time and your pivots. So we can go and eliminate all that data and just have our times and our pivots. But then what you want to do is you need to determine where your pivots actually occurred. And as you can see, you've got a lot of zeros in here which you don't need. So what you want to do next is you want to sort out that data. And so what I do is I take the time column and I copy it over to another column so that my pivot high and pivot lows are in separate places. And then I sort out the data. I'm going to sort all of this data and sort it according to the pivot data, which is in column B. So let me try this again. Let's just use a little bit more here. So what I would do is I'd go over here to sort, and I would select the pivot high, and I'd use descending. You want to use descending. You want to collect all of the pivots descending because you don't want the zeros. So I do that on both the pivot highs and the pivot lows. And what I'm going to wind up with is something that looks like this. Here's all of my highs, here's all of my lows, and the times of the pivots are irrelevant. But when I get down here to the bottom, I'm going to wind up with a bunch of zeros. So I want to eliminate that data because I don't need it and it just consumes a lot of data. So what I would do is if I've got zeros in here, I'd highlight them and I'd delete them. Now, once you've done that, what you really have is a distribution of pivots that have occurred at particular time. What the pivots were are irrelevant. Okay, what the pivots are irrelevant. The times are what's important. So what I'm going to do is I'm going to take the time column and I'm going to add it so that all of the times are in one column. So right here, as you can see, these are the times for the high pivots, and that ends down here. Okay, and then I'm adding the column of the times of the low pivots on top of it. So as you can see, I've got 31,000 rows of data. And what I want to do next is now sort that column. And what I'm going to do, I'm going to highlight it all, go to my sort, and then sort that column in ascending order. And when I do that, you're now going to see your distribution. Here's how many instances we had pivots at 731. Okay? Lots of them. And then it'll go to 732, and eventually 733. Now, how many pivots did you have? Well, you could take the time to count them individually, or you could copy this and put it into your formula. Okay? So now we're going to go over to the other spreadsheet. We're going to take that data, we're going to stick it right in here to time. Paste it, and you can see it automatically counts the distribution. And you can easily see there are certain times that stick out. That's the value of the time clock, the pivot clock. Now, everything else that I do beyond this is just cosmetic. I may want to sort this out in such a way that I can highlight on my spreadsheet my high frequency times. So in that case, what I'm going to do, I'm going to take that data. Let's go up to 215 because that's as far as I'm going to take this. Okay, copy it. And when I paste it over here, I'm going to paste it not according to a normal paste, but according to the values instead of the formulas. So the previous column, we had formulas. Now I want those formulas to just appear as values, and I need to make sure I do that correctly here, which I've now done. Now I can go back and resort this data and sort it according to the high frequency clicked off the ascending, so according to the descending with the greatest number first, I now have